Hello everyone, hello guys. Welcome to our new webinar. How is everyone doing? Is everything fine? Can you see my charts? Hear my voice? Okay, so everything seems fine. Okay, just let's wait a few more seconds. Can see your screen and can hear you. Perfect. Okay, so we didn't have a webinar last week, I think, but I shared some of the videos as well and free analysis on TradingView. So if you're not a subscriber, if you don't receive notifications, make sure to do that. So because not always we can do the webinars, and it's somehow much easier for me to be more flexible when doing those video analysis. Let me just remove my phone here. It looks like that we have some interruptions. Just a second. Airplane mode is on. Okay. Okay. Um, so what's going on? Well, dollar index, it came down at the end of last week. Um, and didn't find any kind of a buyers really, despite Powell presenting his hawkish view for one or two more hikes. What's interesting for me is that he didn't convince traders apparently, because dollar index sold off on Friday. Interestingly, we even saw stocks moving to new high for the end of the quarter. So looks like that there is still a lot of optimism out there, and that maybe there will be even more gains on stocks, because if Powell, with his hawkish remarks last week, was not been able to convince traders to buy maybe for more hikes, and dollar didn't rally. So I think that we either stay here on bullish side for stocks, or at least sideways. I think that Fed minutes today may not bring anything new. Everyone will be watching for next important data, which certainly should be the non-farm payrolls report on Friday, right? So maybe will be some limited moves, but I think that stocks will either stay sideways or even continue to the upside. Okay, looking at the US dollar firstly here, from again to give you just a fresh update here, or maybe if someone joined us for the first time. So what we are looking here on dollar index, I think that that's ongoing downtrend, because we have very nice impulse and now we are just in a sideways price action here. Okay, so I think that this, because it's summer, I just realized that maybe sometimes trading conditions during summer can be very tricky, and a lot of traders are away from their desk. Keep in mind that maybe even this week a lot of traders could be away, because we had 4th of July yesterday. Stocks closed earlier on Monday, so a lot of traders in US is away for the whole week. Okay, so maybe will be some limited ranges here during the summer, but eventually I think that the sooner or later we will see a move out of these consolidations. But because we had before that 5 waves down, I think that this will be to the downside. So now either this can occur after current subwave 2 rally, or maybe after a triangle in a wave 4, if we get a little bit more complex and longer, moving to the right rather than to the downside. But no matter how I look at it, I see this as an ongoing correction within downtrend. Okay, so I think that this is just a pause, a little bit longer one, and that eventually we will see later this year prices coming to the downside. Of course, it will have a lot to do with Fed, or I should say maybe better with speculators, how they see Fed in upcoming meetings. So for now, we have 1 or 2 hikes, possibly still, that will come, but maybe if they will just stick to the one hike, I think that dollar will just see much more weakness, and that US yields will also come down. Okay, so dollar looking at it here on 4-hour time frame, we have very nice 5 waves down, and 3-wave rally. So the most important is that this is a 3-wave rally. I cannot count this as a 5-wave movement at this stage, especially not because we came down from that resistance. We also shared this chart a few times in our some free posts. So I think that there can be more weakness coming. Even if we suddenly, let's say, we rally today, I still think that 103.80, 104 will be next important resistance. So sooner or later, I think that this dollar should come to the downside and maybe even retest this lower trend line support. Even if it's still triangle and will be a limited weakness, there's still a chance, I think, for a drop towards 101 level. Okay, so whenever that happens, on the opposite side of this, of course, we expect that a lot of commodity currencies, maybe not that much Aussie, but generally speaking, a lot of assets should then outperform, obviously, if the dollar would come to the downside. Now, firstly, maybe let's take a look on Aussie dollar. Grega, any recommendations on indicators to validate my wave count except the RSI? Yes, I'm also using simple moving averages, especially 50, 100, and 200. And the most attention I pay is definitely the 50 moving average on the 4-hour time frame. Okay, so this is how I look at it as a potential buying or selling opportunities if we're above 50 period moving average on the 4-hour time frame, or below it. It depends. Okay, so maybe I will, if I will find any kind of this example here, I will definitely show it here. Okay, now, and also obviously I use candlesticks analysis as well. Okay, especially like evening star, morning star, bullish, bearish engulfings, and bullish, bearish reversal patterns. The most important are daily and weekly candlesticks. Okay. Okay. Now let's take a look on the Aussie. So Aussie is not doing that well, and one of the reasons obviously can be inflation numbers came down as reported last week, and then we had the RBA this week, who was on hold. So I think that that's one of the reasons what is holding back this Aussie. But still, this drop can be counted in 3 waves. We have seen broken trend line, and now we are retesting it. So that's going to be a key week for the Aussie. I still think that there is a chance for bullish run from here, especially if I look on Kiwi, which I will do in a second. I think that if dollar will come down, that Aussie still has a very good upside potential. Also, keep in mind that gold and Chinese yuan have been also on a back foot recently. Okay, but I see both of them, gold and Chinese yuan, moving into some interesting potential support. So if this set will rally, then I think that Aussie could also benefit. However, from a trading perspective, I would avoid Aussie for now, because I definitely realize that this could even be a flat here. Okay, I think I have it. I think we have somewhere this wave count. Yes, here it is. So here you can see that that's definitely also a very valid count where this wave B could be an expanded flat. Okay, and then you will see a 78.6% retest and then a rally. So it's a little bit tough situation at the moment. Definitely very sharp drop. So that's why I would avoid Aussie at this stage. Also, if you look at Aussie Kiwi, maybe you see that Kiwi is outperforming. So I think that if you want to be a long commodity currency versus the US dollar, that Kiwi is maybe the best currency to look for. Now here on the 4-hour time, as you can see, very sharp drop. But if suddenly, let's say, we rally by the end of the week and we finish somewhere around 6,800, then I think that this picture, this bullish trend has still some chances to be right. But as I said, we are just in the middle of this. Even if let me hide this, you can see that we are actually in the middle of this, some kind of a pivot level here since February or March. So really, it's tough situation, at least for me here. Okay, so I definitely would leave this one on the sideline for now. Now, since I mentioned dollar Chinese yuan, as you know, China is trying everything to support their economy. So sooner or later, maybe commodity currencies will also benefit from that. Now, from an Elliott wave perspective here, again, we are seeing dollar Chinese yuan at this 78.6% fib level. I'm curious to see if maybe we can remain stuck here through the next few weeks, and maybe even see some kind of a sell-off below this trend line. Then I think that Aussie could really come to the upside. But the most focus I would put on is probably on the Kiwi, okay? Because Kiwi found the support last week after China said that they are willing to push trade developments with New Zealand. Okay, I also shared chart of New Zealand dollar versus the US dollar in some of our free posts. And as you know, we specifically focused, let me just load up charts here, at these supports here on the 61.8%. Okay, so we had a pretty nice run here. It was a very deep correction, I must say, but more importantly, we have a very strong bounce here. We also see this broken trend line, okay, of this corrective channel. So that's another indication why I think that Kiwi could see more upside. Keep in mind that dollar is somehow still sideways, which I shared, which obviously you saw earlier on dollar index. So we are still sideways there. But if dollar will really come to the downside, I think that Kiwi will just explode to the upside. Okay, so of course it has this currency pair is also linked to stock prices. Even stocks come down a little bit in the recent session, but Kiwi is still doing quite well up here. So I think that there's a chance for more upside. Now, from minimum perspective, there's room for 6,300. Okay, because that's where we have this equality measured from the recent swing low. So I'm long Kiwi. We also shared this one, and I also mentioned this on Twitter as well last week. So I think that for now, as long as we are above that level, 60-50, there is still ongoing strength. But if this suddenly, let's say, we see something like this, obviously then I will have to adjust. So short-term picture is bullish. Longer-term picture for me is also bullish, because we have this 5 waves up and now just a big consolidation here that's trying to obviously to confuse traders in both directions, because we have seen some failure spike here to a new high. Then even after this drop, we have seen some failures up here, which was here in May, then break to a new low, and again trying to turn to the upside. So these kind of failures must occur a few times before market can find the real direction. Okay, so maybe this is time from where we may see a straight move to the upside. Also, keep in mind that because this was an impulse and this is a correction, so whenever you see a correction, which for now, by the way, this drop cannot be counted in 5 waves. So I'm bullish. I'm expecting rise to resume sooner or later. So whenever you spot a correction, then this correction should be fully retraced, right? Meaning this should be minimum upward objection, which in my opinion can be the case still this year. Okay, so of course, invalidation level of this view is obviously at 2022 lows. So that's for Kiwi. If we also look here at these correlations, you can just let me load the charts here. Okay, so where we have it, I think is this one. Okay, so I have a specific layout just for correlations for intermarket analysis to define the strength and weakness of particular sets. And you can see here, where's Monday? There's Friday, Sunday, Monday. Okay, so you can see that since Monday, a lot of dollar pairs are actually sideways. You can see euro, Swiss franc versus the US dollar around almost unchanged, CAD the same, slightly higher pound and Aussie. But notice where is Kiwi? Okay, New Zealand dollar. It's up more than 1%. So in my opinion, this just shows where or which currency could really do well if the dollar will really sold off, and maybe stocks will continue to rise. So based also, not only that, we have the Elliott wave count, which also suggests some very nice bullish developments. And then we had also this China. I think that for now Kiwi looks good, and I will continue to look for more upside. But even if you look, just a second, let me go back to Kiwi for a second. And if you look here at the hourly time frame, you definitely are seeing prices at some resistance here, right? We had this previous swing highs, so maybe not straight move to the upside, maybe firm the next probable move. Now let me look on the euro dollar. So on okay, maybe something is lagging, so let me just try to wait for a few seconds. Okay, so can you see my charts? Is everything okay? If someone can confirm, just please, because one of my team members said that something is trying to lag here. Okay, so let's take a look on euro dollar now. Euro dollar is, I have been repeating this bullish pattern for a while. We see these 5 waves up and now consolidation. So either we completed this flat, or maybe we are still going to see a triangle here if we will stuck in the range, as is described, obviously the opposite side of the dollar index. Yeah, euro dollar is up, so you can see my charts. Very good. Okay, so I think that more upside here could be coming this year, either, as I said, straight from here or after more sideways price action. ECB obviously is still hawkish, much more hawkish than the Fed, so maybe that's one of the reasons why we could see maybe more upside here. Inflation is still, I think, above 5%, 5.6, 5.5 or something. So definitely they have goal to bring it much lower. So there are actually, you can see the ECB members showing up each day. It's like copy paste comments that they should be more aggressive, that rates are not down yet. So we will see if they will try to convince traders, but at least from an Elliott wave perspective, I think that more upside could be coming. Well, looking here at the 4-hour time frame, I have a little bit different labeling compared to dollar index, but still the idea is very similar. You have this free wave correction. You're now just sideways after breaking, spiking to a new swing low last week, and then reverse on Friday. So this reverse on Friday was quite important because it invalidates some of the chances for a very strong bearish impulse. Because this, if the support for a wave C holds and you see a response from the market, then it means that market actually confirms your potential outlook. And since we are holding this support quite well for now, I think that maybe we are just waiting for the next catalyst to bring the prices higher. If suddenly, let's say, we drop back towards 107.50, still looking at the euro dollar, as I said earlier, would be a triangle, and still think that there would be a limited weakness, but of course at much lower prices. Also looking, I will switch to pound now. Okay, so cable, as you know, is still in a bullish trend. I think that there can be more upside here into this wave 5. Notice that we have this some key supports here. This was a swing high back from May, and then even this back from May of 2022, and then same thing in May of this year. Now trying to become a very nice support here. So I think that there can be more upside. Keep in mind that a lot of traders, especially on the long side, were on the wrong foot last week, because cable came to the downside despite hawkish Bank of England, who, this was not last week, I think it was a week earlier, who actually raised rates by 50 basis points. So market did not move to the new high. It was just a spike here, as you can see, on June 22nd. And then we came all the way back to the downside, to this 12630 support. More importantly, we have seen this drop now in 3 waves. The support hold very well, and we are seeing a reversal higher. And this reversal higher already has impulsive characteristics on a smaller time frame. Okay, so for me, there's no way to count this differently than as a correction. Okay, so it's not an impulse from the highs. So whenever you see drop from the highs in 3 waves and not in 5 waves without overlaps, then it means, I mean, you don't need to complicate. You just simply look, where is the trend? Where's the main trend? It's to the upside. On a smaller time frame, you have 3 waves retracement. So whenever you see this kind of a price action, at least this is how I look at it, I will stick with the trend. Okay, so I think that there can be more upside here on cable, and I think that 129 is very probable as long as we are trading above 12450. But if we break this trend line, okay, here around 126, then obviously that would be the first indication that maybe something is changing here, and I would adjust my views. But for now, I think that this pound has much more upside potential from here. Tim is saying the triangle is what is happening or can be happening on euro. Yeah, actually, I also have back in my mind, it's the same application for the next, let's say, for the few months. We just have to be patient. I just think that the next big move obviously can be to the upside, but it can be challenging to catch the next impulse or potential breakout already now, because we are in the middle of the summer. So I think that we have to be a little bit more maybe patient here. Okay, so that was for pound. Let's take a look on dollar yen now. So before we go to dollar yen, I have here the COT data. Okay, and you can clearly see that if you look at green line, these are large speculators. Okay, and look where the markets or how dollar yen has traded or responded whenever we have seen these extremes. So firstly here at the end of 2021, after this first drop, then dollar yen moved sideways when we moved to the extreme with large speculators. Then again here in 2022, after massive move to the downside, we even rallied. Then again here there was a massive reversal, okay, because the price obviously was extremely low and we have seen very strong move to the upside. And now again with this pullback on Japanese yen futures, which by the way is trading around 61.8% at the moment of this initial first rise. So again we have these large speculators moving into these extremes. So from that kind of a perspective, I think that there is a chance, because of this sentiment and positioning, that we could be around the corner for a new bounce. Okay. Also, for now, Bank of Japan is obviously not changing their policy, but they are watching. They said that they are watching the FX rates. So closer we go to 150, greater is a chance that there will be even more speculations for, or maybe even intervention. Okay, so I think that these are quite interesting levels for dollar yen. Of course, dollar yen would come lower much easier if we see, let's say, maybe Nikkei stopping at resistance, if we see lower US yields and more importantly lower US dollar. Okay, for now dollar index is still sideways. So I think if dollar index would really drop and the US yields would really come to the downside sometime this year, the dollar yen has a lot of downside potential. Since I mentioned Nikkei, if we look here, you can see that Nikkei came actually this year out of a triangle. So there was a lost correlation in 2022, but then at the start of this year, in January to be specific, and then in March, they are trading together. Okay. And we know what happens if not what happens, but usually we can assume that maybe upside will be limited if the move is coming out of a triangle. Okay, because triangle occurs prior to the final move within the higher degree trend. So looking at the triangle measurements here, we already reached the first one. So I took the longest wave, which was obviously wave A, projected from the end of a wave E. So I came out with 32,800 around so. Okay, and then you have the second measurement from a breakout point, which obviously is above wave D. So this is still around 35,000. So there's still room for slightly more upside, but overall, that's the range where I would expect that this bull run is coming to an end, even if just temporary. So if we see a pullback here and a drop, then why minimize that? I don't know. Okay, so if we see that, then I think the dollar yen could also stop here at this resistance. So 61.8%, 78.6%, that's the key area for this week. And as I said, Bank of Japan, definitely we have to watch developments there as well. Now, looking here at the 4-hour time frame. Okay, so 4-hour time frame shows potentially 5 waves up. Either we are in a 5th wave or close to an end, or maybe that's a little bit more extended middle wave 3, and we will have room for more upside towards 147, 148 after next pullback. So key will be to track the short-term wave structure whenever we see a pullback or a drop in price. The key will be to see what kind of a structure will unfold in this next drop. If we'll be in 5 waves, we may even have some opportunities on the short side. If that would be slow, choppy, corrective, overlapping, then we will know that this is just a correction, that we will continue even higher. So for now, I think that it's a bit tricky situation, at least if you are more like a swing trader. Maybe you are more leaning towards the bearish side. If you are an intraday trader, there is still some room left for this current cycle. I'm looking at should be around 143.85, lower is 143. But if suddenly this one is broken decisively, let's say something like that, we see a straight move to the downside, and then more importantly, you see a weekly close here, then I think that more weakness will be in the cards. Okay, so I'm watching dollar yen very closely, but I just don't see that we are already topping out here. Okay, so that was for dollar yen. Let me check if we have any questions here. Something again is lagging apparently, so I will wait. Okay, and now the next markets we will take a look will be gold. Okay, so I will switch to gold. Just let me know whenever you see these charts uploading. Okay, so what's going on with gold? Well, gold, it's coming to the downside, of course. US yields are still high. We have as I said earlier, Chinese yuan very weak, Aussie came to the downside. But I have been talking about this for a while, that we are seeing prices in a fifth wave drop. So I don't know if that's an impulse that will take us much lower, or maybe is that impulse as part of a very deep expanded flat correction. Okay, in either case, the most important is that whenever we see 5 waves and potential completion of these 5 waves, the minimum opposite reaction should be in 3 waves. So even if I will stick to the bearish view, I should see 3 waves up first and then resume to the downside. Okay, if that was a flat, then this 3 wave movement to the upside will become a 5 wave movement later on. So I think that here bottom is forming. And also, if you let me just delete this a little bit. Also, if you look here at the price action itself, you can clearly see that we came out of a triangle. And as I said already earlier, whenever there is a triangle, move out of a triangle, you can assume that this higher degree trend can come to an end. So there is opportunity for a break out of a triangle, but you have to be very early. Okay, if you don't catch it, then keep in mind that maybe higher degree trend could come to an end. So not only that, we had also this wedge formation, okay, meaning an ending diagonal positioned here in a wave 5. So we are seeing a pretty nice reversal from 1900. It's a very important round figure as well. Also, there was a wave 5, okay, that equals almost on tick to wave 1, okay. So we had a lot of important support area here, from where not only that we bounced, but market moved quite nicely to the upside so far, which confirms the idea that this is the very strong support. So in my opinion, we could rise further. Of course, may not see immediately break to the upside, but I think that maybe this week we could see more gains, or maybe a week after. Watch out this trend line resistance of this downward channel. Whenever it's broken, we could continue higher. So I think that gold could see more upside. And also, member asked me if one of the members, if I can call gold silver ratio. So the gold silver ratio here is, in my opinion, in a consolidation, can be a triangle, can be unfortunately triangle, sometimes can be tricky, can be a bullish or can be a bearish one. Okay, so looking here at any kind of a scenario for a triangle, there is a chance for more weakness, because even if I would label this as a bullish triangle, then this should be wave A, B, C, D, and E. So as you can see, I'm missing wave E. So whenever gold silver ratio is moving to the downside, this is normally positive for metals in general. So I think that this is a pretty nice structure so far, at least for the short term, because this appears to be like a free wave rally. So even if weakness will be limited, at least in the short term, we could approach towards this lower trend line. Okay, so this also makes sense to for maybe for bullish to be bullish gold and even silver. Okay, now let's take a look also on crude oil. Okay, so we there was an open meeting. I mean, it's still yes. I mean, silver expects more downside. Maybe in the short term, silver could see another spike to the downside, but eventually, I see fifth wave of C coming. So in either case, I think that there is going to be limited weakness. So crude oil. Crude oil has been very challenging, very tricky lately. Okay, but I still will stick with this view. I think that we are close to important lows, or maybe already important lows has been reached here around 64 for or 63 for this year. Notice that we had a lot of important swing supports here in that area. So in my opinion, there will be a higher degree correction. OPEC is trying to stabilize prices, right? It's an OPEC meeting today. Saudi Arabia, I think it's looking for more cuts. So they're definitely not going to maybe to look for more outputs but less outputs, because if interests are high, then you know that demand could decrease, and obviously if they want to stabilize the prices. So I don't see in this hawkish period, I don't see crude oil coming to the downside, at least not for now. So I think that there can be more upside, maybe already straight from here. I'm curious to see where crude oil will close today. We are seeing pretty nice runs so far. I would like to see a close above 70 to 70, maybe, to make sure that we are headed higher. Notice that this is from that spike. This was wave A, and then I have been looking for this potential expanding triangle in wave B. I don't like to count the expanding triangles because I know that they can be very tricky to follow, very hard to discover them. But somehow I found this one, and it's still, despite this very big dip here, it's still holding up quite well, and it's even reversing. So key will be maybe a daily close above 73 to make sure that we are maybe in the cards for this, for 75, 76 area. Okay, and on the opposite side of this, we know that dollar NOK, let me check where it is. NOK CAD could benefit. I will look at the dollar NOK because it has probably the best clear wave structure at the moment. So here we have 5 waves up. What I like about dollar NOK, that we have seen a new high here, but just a failure break. And not only that, you can also see that there was a sharp move to a new high. Okay, that was a very sharp move to new high, clearly an impulsive, and then another very sharp move to the downside. So that looks like a top formation because we weren't able to stay above the previous highs. So despite very long consolidation here, a lot of traders would expect that market will resume higher. But again, notice what happened. This move came out of a triangle that I talked and mentioned so many times today. So this move came out of a triangle, so we have seen limited upside and reversal. And if crude oil is really at very big support for this year and coming away from it, I think the dollar NOK will see more weakness. And looking at maybe more closely here, you can see a very nice drop here, and this rise, in my opinion, on a smaller time frame from mid of June is in 3 waves. So sooner or later, I think that this weakness will resume. Okay. Now let's take a look on the S&P 500. Okay, so the S&P 500, in my opinion, is bullish, but of course we can be approaching some near-term resistance levels. So just be aware of a pullback. We have this, but not maybe just now straight from here. It could be from higher prices, but during summer maybe there could be limited upside. VIX is still at these extremes. But looking at the 4-hour time frame, we also shared these free updates a few times over the last few weeks. So it's an ongoing recovery. Notice that I can count 5 waves up from May lows. Okay, but since we already touched these new highs, it's a little bit tricky to be maybe looking for new longs from here, because we know that whenever we are in a 5th wave, there can be limited upside, but there is room for these FIPS projections of 5th wave here around 45.30 to 45.80, around there, and then we'll see what happens. So here, I mean, if you're really looking for some scalps on the long side on the intraday basis, then maybe yes, there's still a chance to be long. But generally speaking, if we suddenly see, let's say, a drop back towards 4440, then I think that buying dips would make more sense. Okay, so you just have to wait on prices to unfold a little bit further here before you may look for any new opportunity, in my opinion. But overall, stocks are bullish and could continue higher, but just maybe waiting on dips could be a better approach. Now, looking at the NASDAQ 100, this one is also sinking a 5th wave. Of course, there's room for more upside. Again, unless we see a drop towards 15,000, then buying after more complex wave 4 would make sense. So generally speaking, even this one is bullish. We have seen some retest of these first supports here a week back or so, And if suddenly, let's say, we really see more weakness, then the next support would maybe even be here at this former wave 4. But overall, I think that there is going to be more upside on stocks. Also, let me look on this equal ETF, the S&P 500. Okay. So this one is pretty straightforward. I mean, very clear wave structure, if you ask me. So markets will always move like that: move to the upside, consolidation; move to the upside, consolidation. Okay, and if you look back, this has clearly been the case here. Okay, so if you just respect what's going on, why we should fight and trying to call a top, okay, the multi-decade top, if there's much easier to be with the trend. So always when I have a chance to label the uptrend with a bullish wave count, I will label it bullish. Okay, I will try not to force the wave counts in my favor of what I think. Okay, so just trying to be, it's very important to look at the wave structure as simple as possible. Okay, maybe for some, not even labels will matter here. They just see it's a consolidation. So that's one thing. Now the second thing is that I am comparing the current cycle. Watch the blue cycles, the current cycle with the previous one. Okay, the previous one here lasted 78, that's weekly, 78 weeks. That's what, 2 years or so. And now again we have the 78 weeks almost coming to an end. So maybe later this summer, okay, we could potentially see the end of this consolidation here, which by the way could be a triangle. But then there's also another cycle too, that I call it, which could go back from 2018 to 2020. Okay, so why I'm looking at this cycle as well is because normally these very strong bull runs occurred after strong panic and drop. Okay, and this so far didn't happen yet. So I'm just curious to see if maybe, let's say, we get some kind of a surprise in 2024. I still think if we just stay sideways, I still think that then we should focus on this cycle too. But for now, how I see the US dollar, how I see potential US yields and other assets, I just think that maybe this triangle is the best choice at the moment, and that we could potentially rally maybe after the summer, when we could get more volatility, more clear actions or words from central banks, when they could finally maybe be done with hiking cycles. But we just have to understand that stocks will see much easier upside and break to the upside, not when Fed is on hold, but when they are cutting rates. Okay, because that's when money will be cheaper and could be invested in stocks. Okay, if they are just on hold, it doesn't mean that rates are lower and that there are more free money to be invested in stocks. No, they have to cut rates, and that's when you will see easier move to the upside. So that's something that we have to consider, or that we forget too often. Okay, so that's for the S&P 500. Also, I can take a real quick look here on where I have it, on Tesla. I will look at Apple, Tesla, and PayPal just real quick. So firstly, looking at PayPal, I think it's a pretty nice move to the downside. And notice that this recent drop occurred after the earnings reports here back in May. But this move can be either not the perfect ending diagonal, could be even a triangle. That's why I labeled this as an alternate scenario for a triangle. So again, I think that bottom here could be forming. Also, keep in mind that whenever you're looking at single stocks, you don't have to complicate. If there is a company that a lot of, or product that a lot of consumers are using, then in my opinion, it's worth for potential investments if the price is low. Okay, simple like that. So you don't have to complicate too much. Of course, that's more like for a longer term perspective. So I think that still PayPal could be trading much higher, maybe weeks, months, maybe years from now. But overall, people are using PayPal, and I don't see it why would not potentially stabilize here at these lower prices, or maybe even lower. But from a longer term perspective, I think that there could be a reversal. I even have this 5 waves down, as I said. So even if there will be a temporary recovery, there should be at least a free wave movement. Now let's take a look also on where it is, on Tesla. Okay, so we covered Tesla, I think, a few times, and it's been a pretty nice uptrend, which is still, by the way, unfolding. There is a 5-wave movement, so of course, maybe you will not get any kind of aggressive now when we are approaching 300. There's now not one straight move to the upside in either direction. You will always see some pullbacks, and this recent pullbacks was 4th wave. We came down back to fill this gap. Now we are again moving to the upside. Notice that we have another big gap here. I'm just wondering if there will be a breakaway gap, meaning that price will just extend to the upside, or maybe because we are in a 5th wave, this gap will be filled in a few weeks. So in my opinion, it's a little bit high price here. Definitely not good to enter any kind of a short-term trade here. But on a longer-term perspective, after the next pullbacks, I think that there can be more upside, clearly, because this massive drop from all-time highs unfolded in 3 waves. Okay, so that could be a very big wave 3. But to ride this trend, you just have to be a little bit more nimble here to catch the entry. Now let's take a look, as I said, also Apple. Okay, so Apple is in a very nice uptrend. We even shared the free idea here on TradingView when Apple was down here. I believe we were looking for a wave 4. So again, similar story like with PayPal. I mean, Apple has seen a massive move to the downside, almost not 50, maybe 40% drop, and Apple, they're using Apple products worldwide. So obviously, it's been a pretty nice reversal here. And I think that that's an impulse that will take us even higher. But again, you maybe want to wait on the next pullback if you want this trend, or want to join this trend. Very nice supports on dips would be whenever we print or end wave 3 high, and we see or measure wave 4 distance compared to wave 2. So that will be next support. I'm not sure if wave 3 will end right here. If that would be the case, then support would be around 180, or maybe even a little bit lower here, where we have this massive swing support area. Okay, so waiting on a pullbacks would make sense here. Okay, now let's take a look also on final markets today. We are 50 minutes. Oh my god. Okay, let's take a look on Bitcoin. But before we go to Bitcoin, I want to bring on this chart. Okay, so we shared this idea this week, and notice that we are doing time analysis of corrections and bullish trends. Okay, and you can see that here was a correction almost for a year. Here was a correction for a year in 2018, and then also if we measured from recent highs, here was lasted for around a year here from 2000 and 2000 late of 2021. Okay, and then after those corrections, we have seen 3 years of a bull run, meaning 35 months or so of a bull run here. Then again here in 2018. So if we assume that maybe we could be in the similar period, then we are still have 2 or more years left for this recovery to resume, which makes sense, because I would not be surprised if we maybe really see a move to this new high. So I think that maybe altcoins can be a little bit challenging. I think that Bitcoin is much better here, in my opinion, from a longer term perspective. Also, it has a lot to do with the US dollar. Cryptos will not move in either direction by itself, especially not Bitcoin. So I think that if dollar is really going to see more weakness from that consolidation that I showed on dollar index, then I think that cryptos could fly much higher. Okay, but of course, maybe not straight from here. There will be pullbacks, but that's more longer term picture. That has a lot to do with the Fed and their policy, of course. So if we take a look now on Bitcoin. Okay, so Bitcoin is clearly bullish. We have seen a very nice move to the upside after this Binance story. So it looks like that a lot of coins were transferred from exchanges to private wallets, which is positive for cryptos and not negative, because with private wallets it means that that traders, investors, small investors will stick with their coins rather than exchange it for something else. So we have seen a pretty nice move to the upside, but notice that we are now at a very strong potential resistance. But good news is that we are consolidating. Okay, so we are consolidating here, meaning I will be expecting more upside, and if we see any dip here below or towards 29,000, I think that there can be opportunity to join this trend. Not only from that very bullish count where we either will see wave C to the upside or wave 3 to the upside, but I also have another wave count here, which shows the idea that maybe we could be trading here in the middle of a very big potential flat correction. Okay, and you are now going to see wave B. So even after this wave B pullback, we will see more upside. Very strong and key support is going still to be around 25,000. So as long as we are above that level, which is a pivot level, by the way, I think that Bitcoin is in uptrend. So if suddenly, let's say after printing a new high, we come back to the downside, that's again going to be very interesting and important support levels. Okay, and why on both wave counts, as you can see now, we either will see more straight move to the upside from here towards 61% of wave of the first impulse, or maybe it's going to be limited upside for a free wave recovery in wave B as a part of a flat correction. Well, in both cases, there's good news that this trend should resume. Why? Because if you look closely here, let me remove these letters. Okay, if you look closely here, there was a corrective free wave drop from a new high to these lows. So whenever that's the case, whenever you cannot count 5 waves from the top, it means that most likely this is a correction. Okay, or it's part of a complex correction. So in our case, it could be part of a complex correction because this move, okay, is also in short term is bullish. Longer term, we could see higher degree swings and pullbacks before we see a next break higher. If we see the Ethereum here, I think that Ethereum is in a pullback mode. We posted 2 wave counts. Actually, the first shows that maybe wave 2 has ended here and we'll see straight move to the upside, but because of this reversal and divergence here on the RSI, okay, I just don't believe that we will see wave 3. Normally you will not see divergence between these two highs unless wave 2 is going to be more complex, then this would be fine. Or maybe even better scenario, in my opinion, is that we completed the first impulse from that lows and you're now in a corrective stage. Okay, because notice that there were also overlaps and price break to a new high but couldn't stay bullish. Okay, so in my opinion, that's indication that bulls were tired here. Okay, and because we are now breaking below the previous new high, I think that we either see a new ABC correction or maybe this is already the higher degree wave to maybe some kind of an irregular correction. Okay, so I think that cryptos are looking good, especially Ethereum. Bitcoin could see more upside, but just be aware maybe of pullbacks towards 29,000 on Bitcoin. There's a very nice support. 25,000, as I said, is a key level for bull and bears. Okay, break below 25,000 is a new bear market maybe. On Ethereum, I'm bullish. We'll be expecting more upside as long as we are above these June lows. The support on dips is going to be around 1800. Okay. Okay, traders. I hope that you enjoyed this presentation. It was probably the longest that we ever do. 56 minutes. So thank you if you were staying with us for the whole time. Thank you for your support. If you like our webinars, make sure to subscribe to our channel, to our and to put notifications on, to leave us a commentary, press a like, and make sure to be with us next time. Okay, if you will have any questions, anything, you can either find us through the links on TradingView below this video, or also obviously we have also the Twitter feed as well. Okay, traders, enjoy your day. Be careful today. We have Fed minutes, and then you also have the non-farm payrolls report on Friday. Okay? Good day. Bye.